S&P Tech, the worst sector of the week. S&P Software down 11% in 4 days. Wisdom Tree's Cloud ETF down more than 10%. For more on this group, this whole arena, let's bring in John Belton, portfolio manager for growth equities at Gabelli Funds, and good to see you.
Good to see you, Joe.
They all went up, so I guess they can all come down indiscriminately, but you make one point that I thought was pretty interesting. So if AI eats software and revenue goes down for all the software companies, and they're less important, and then you simultaneously have the worry that AI doesn't perform, is not as much of a game changer as we all assume. And that's a worry, too, adding to the sell-off. Both can't be true. It either puts software out of business and is a dominant force and brings great returns, or it doesn't, and then software shouldn't be going down. They both shouldn't be going down, but it's not surprising in a market like this.
Yeah, it's definitely an interesting, irony in the market right now. So there's all these fears about AI being a bubble and these AI investments not generating returns. But at the same time, yeah, AI is clearly generating returns in certain areas today. So those areas would be digital advertising, number one. I'd say digital commerce goes along with that. Cloud computing, number two. And then I think software, agentic software, is clearly becoming number three. And so I think you can't have it both ways. AI is either a bubble or AI is eating software and other industries. I think it's a little crazy to say both.
The market would tell you, yes, I can have it both ways, because it has had it both ways, has it not?
Right. Well,
but they're both, they're so extended on across the board, or were, not as much now.
Right. I think case by case, there's certainly examples of stocks that got way overextended from a valuation standpoint that have been coming back down to earth, even before this last month. I think we've been in a couple months of market rotation out of winners into laggards.
Which ones do you consider overvalued, and which ones do you think, hey, they've still got a relatively low PE, especially if you compare them to like a Walmart that has a 44 PE at this point? How do you figure who's been overextended and who actually has earned this and is going to continue to grow into it?
I do think a lot of the software companies, if we rewind back 6, 12, especially 18 months ago, hindsight's always 20/20, but we're probably overvalued. Overall, not all, but many were overvalued relative to fundamentals that were starting to decelerate, and there was disruption risk that was starting to percolate. I think a lot of, on the flip side, a lot of the large tech platforms, the ones that are benefiting from AI and see less obvious AI disruption risk, are trading at pretty reasonable valuation multiples today. Now, valuation's not an investment thesis in and of itself, so those multiples can always derate further or start to re-rate. That's always going to be hard to call, but I feel pretty comfortable with where the large tech companies are trading currently.
So they all went up, they all came down. If there is a rebound, do you expect it to be more discriminate in terms of looking individually on a case-by-case basis at this point, or do they all go back up?
Yeah,
or do they not? They all continue to go down?
I think it's going to be case by case, and I think different businesses face different levels of disruption, and I think different stocks have become relatively more or less dislocated versus fundamentals. So yeah, I think when I look at things today, what's happened over the last week or so, it's been indiscriminate selling, treating everything the same, treating the most obvious AI disruption case right alongside with the much more insulated business models. And I think from here, it could take some time to digest. The longer this sell-off continues, the longer it can take to pick back up the pieces. But I do think there's going to be pretty interesting opportunities on the other side of this to pick some quality names that are AI beneficiaries.
Do you have some for us, or we'd have to open an account at Gabelli?
Well, just take a couple of the names that have reported this week. I think Google and Amazon both reported this week, both sort of earnings that the market has for lack of a better term, puked on numbers that were pretty strong alongside really aggressive investment CapEx outlooks. And I think these are just two companies that are...
I mean, that's what we're talking about right there, John. That really didn't look like a day of reckoning or coming back to earth on I mean, it does on some, more so on maybe Amazon, but certainly not on Google.
Well, yeah, Amazon now, I don't ever remember Amazon trading at this multiple. You brought up Walmart earlier. I don't want Walmart to be catching strays here, but Amazon's, I think, over a 20-turn PE discount to Walmart now, which is, it's just interesting. I don't think that's the only reason to buy Amazon, but I think that extends your upside case if, and I think when, they start to get fundamentals, going back in the right direction.
Would you just, in general, think there's something to the concern about software companies?
I do think so. And I think, if you've played around with or checked out this Claude Code tool that...
Oh, yeah. Well,
in our spare time.
As much as I love writing my own code, if I could, spend less time, on a high-performance Pascal for my Commodore computer. No, I don't. So it really writes code.
Rick Sherlin compared this yesterday to a forest fire that kind of burns through software every 10 to 15 years. Is that what you think this is?
Well,
laying waste to allow the new stuff to come in?
Again, I think software, there's several reasons why these software businesses have been so strong. Mm-hmm. I don't think that the code itself has ever been the real secret sauce in software. I think it's been identifying a workflow, creating code against that, and then building like a go-to-market organization to sell the software. And I think what Claude Code does is it completely commoditizes the software writing piece of it. But to answer your question, I do think software is in a moment where they have to figure out, how do we coexist with this new technology? How do we use it to improve our products? And how do we pivot our business model to survive? Because it's definitely a moment that doesn't come around often where there's an existential risk now for the space.